Good morning, traders. Chris Bus here with Traders Profit Compass with another edition of Before the Bell for Tuesday, September 20th, 6:55 a.m. as I'm starting the video. And you know the routine. Run your player at 1.5x for best results. Okay, looking at futures, down about 0.5%. Not a lot going on. Of course, all eyes are on the FOMC. Their meeting starts today. They'll be out with their rate decision tomorrow at 2 p.m. and then a presser with Jay Powell at 2:30. It's widely expected they're going to go 75 basis points, but you know how that goes. Always subject to surprises and all kind of gyrations, especially with the guidance. We've got after tomorrow, there'll be two more meetings before the end of the year. We've got one right before the election in early November, first week of November, and then we've got one in mid-December. And I anticipate they, in the commentary, they're going to lean to the hawkish side to keep the market kind of off kilter, not give any kind of signal that like, okay, here's 75 bips, but yeah, we're done for a while. I don't think you're going to get that kind of signal. Now, that doesn't mean the market doesn't go crazy, in either direction. All I'm saying is I think you get the 75 bips tomorrow, and I think you get a Fed that says, still a lot of work to do on inflation, blah, 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 blah. And then we'll just have to see how the market reacts to that. Now, as far as today goes, anything can and usually does happen. Like yesterday, we had a very poor opening, and the market kind of built on that all day. Not a big exciting day, but just grinding higher. There were a few nice trades to be made. Now, as we get closer to the Fed, into afternoon trading, and then tomorrow, the usual playbook is just kind of oscillating, ahead of the Fed, just, kind of get your final positioning, whatever. So we'll have to see if that plays out. So don't be surprised if the trading range becomes a lot narrower into the FOMC print tomorrow. So let's get into it. U.S. dollar not doing anything, just kind of maintaining its breakout here above 109.50. I wanted to show you the 2-year. We're pushing 4% now on the 2-year as front end rates are more highly influenced by the Fed, right? The Fed is controlling, overnight rates. So then the farther you get out on the curve, 3 months, 6 months, a year, 2 years, 5 years, 7 and 10 and so on, that the Fed's effect, while it does ripple through, the ripples, way out at the 30-year are much smaller in amplitude than they are at the 2-year. So we're right here at 4% or close to it. And then we'll see what happens tomorrow. The thing about it is now there's options, right, for your money. There used to be the TINA. There is no alternative. Rates were at 0.5% or 0, kind of forced you out on the risk curve. But now you can park your money for 2 years at 4%. That ain't all bad for a lot of people. So there is alternatives now, and then that's the competition between bonds and stocks. And to be honest, I've been fairly amazed that the bubble, junk, Ponzi, ARC names have not just been destroyed here. They've been actually holding their own. We've been looking at it every day. And as these rates have climbed, I would have expected those real speculative names to really fall apart, and they have not done that. So I've been pretty astounded by that. HYG, high yield corporate bonds. We haven't talked about this a lot, but I wanted to show it to you. Notice that just in general, the relationship is as risk appetite rises, HYG is gonna rise along with it. And you see little points. I mean, this chart goes way back to 2015. You can see when there have been risk off moments, the drops in HYG. Here was COVID, and now we've dropped down below. And what I wanted to point out here is that we had the June lows in equities right here, right at 73 on the HYG. And you notice that we're just above that now on the HYG. What you can do, and I'll just go ahead and say what you should do, even if you're not trading it, set your alarm at 73, 72. You see these tails come down here to 72. You set it at 72 if you want, 73, 72 and a half, right in there. And then use that as a major risk on, risk off alarm bell. So for instance, if there's enough of a risk on sentiment that HYG cannot break the prior low, then chances are that equities are going to be able to hold it together and not break that June low. If you see, or your alarm goes off at 72 or 72 and a half, then you got to really dial it in, because if HYG breaks this prior low, you're into an air pocket here on the volume over price profile, and then there's that opportunity for a waterfall sell-off and risk, and equities would be going right along with it, and you would probably see that on the equity curve. But what I'm saying is that this is a good risk on, risk off measure, that if you see HYG falling apart, you got to be really scared about equity risk at that point. And then on the other side, you could, while you're in there, you can set yourself an upside alarm at, say, 76, or even here at the 200 at 76.80, 77. If you get an upside trigger, then that bodes well for equities and a risk-on environment. So you could set yourself a couple of little levels in here that would, kind of influence your strategy going forward. Like, you break 72, you got to either get out of the way or get short. On the other side of the coin, you break above, turn the corner here, you want to be more tilted to risk on. VIX dropped down yesterday, down around 25 and a half or so. I think we're still in this trading range. Now, of course, the FOMC could potentially be a thing that breaks this trading range either to the downside below 25, or a potential moonshot if everybody takes it the wrong way, breaks above 29, breaks above 30. That'll be off to the races. On Bitcoin, had a little fake breakdown here below 19,000. Now we've recovered it. So crisis averted for now. I think 19,000 is your clear pivot on Bitcoin. Moving on to oil. There's not a real trend here. I mean, it's hard to really pick something out. There's plenty of opportunity for intraday trading. Came down here, tagged the prior low at 82, and then closed up at 85. So, you get a $3 move on oil intraday, and you're sharp at trading that. There's a lot of money to be made there. So, now you're back up here, 85.36. You've clearly got a prior low here, and then you're right in the middle of the range, right? 80, 85 up to 88, and then 82. So you got $3 in either direction. And so if you want to go down to a 5-minute chart or a 15-minute hourly on USO or on your micro mini oil futures, knock yourself out. But that was a pretty big intraday move there. Nothing going on the oscillators. We're drifting to the low end of the range, but not enough to say, okay, get long like we were back here. Same thing on the NAMO, drifting to the bottom half of the range, but not at any extremes. SPY, here was we tagged the prior low right down here and then made a steady move back up. I think on SPY, for me, 390 remains the mega pivot on this chart. We've got a high volume over price bar here. We've got a whole string of reactions right along that line. So, just looking at the chart, it's a bearish trend, right? Lower highs, lower lows, price below all the moving averages, and all those moving averages are tilted down. So, it's a bearish setup. The first move to fixing that is recapturing this major pivot at 390. That would be a plus. Just keep in mind that wouldn't even get us back up to the 8-day, right? Which is still, the price would be below all the major moving averages. So, yesterday we opened low and just worked our way higher the rest of the day. There were little intermediate points here you could have bought, especially here at 386. And then you got a good final closing hour where it really moved. But in here, while there were no real sell signals, it was, quite lethargic. Grinding higher at an ever, minuscule pace. But then it really picked up after it broke out above 386. Same kind of setup with the Qs. Bearish chart. Lower highs, lower lows. Price below all the moving averages. Price below trend. Price below the major pivot here at 295. I think, if there's a move into 295 that stalls, right? You've got the 8-day there, and you've got all these reactions along that line. That's going to be resistance. That's an objective shorting level. And then if you get stopped, you got to quickly switch gears, and then, for a little tactical long for potentially coming up to test the 20 or the 50 and get into this gap here to fill. And that that would be a nice technical move, right? Don't leave any unfinished business before you go lower. Come out of the Fed. Somehow that is taken as a bullish sign. Rocket it up, fill this gap, possibly even get to this downtrend line, and then fail. So I think at this point, what you're looking for on any positive moves are where are the overhead resistance level and where could those failure points be. Now on the downside, we've tested the lows, right? We had a nice test yesterday of this 285. To me, if the train is heading out of town, that would be another stop. Why? You've got a drop off in volume over price here. You would lose that level. I think you come down to 280 quickly. You can see there's some support along that line, but not a lot. I think you'd be down here looking to fill that gap, and sooner rather than later testing these June lows down at 270. Here you can see yesterday's action. You had that test of 285 right here. That would have been a nice buying point, right? Buy support, sell resistance. So you had a test here at 285, and then you got a quick move higher. If you just were patient in here, you finally got rewarded. Now price is up into this 292 area. You can see support, support, support. That makes this resistance. So it gets a little tougher right here at 292 to overcome that resistance area. And then you got some resistance at 295 and the downtrend line. If there were to be a pop above 295, then you got some of that running room we just talked about with an open gap up here above yet to fill. IWM had a real nice day. And unlike SPY and QQQ, IWM remains above what I regard as the main pivot here at 178. You can see, the line of reactions, resistance, support, support, little undercut, but recaptured above. I think 178 is your big pivot there. And you can see yesterday there was a real nice opportunity, very much like the Qs, where you had a reach back right at the open to 177, where it was an objective buy against the prior low. Never broke it, got a nice reaction. But hey, even if you didn't get that, what do our rules say? You buy a recapture of a well-defined level. You had a prior low at 178. You had all this support at 178, which made it resistance over here. You got the breakout, which was your buy. You never got stopped out, and then you got a nice push into this gap later in the day up to 181. Still got $1 yet to fill. Probably gets a little harder here at 182. And the downtrend line, that would fill the gap, hit resistance. That might be it. If it can break out, then it can come up to 184, where you got the next big high volume over price bar and all this line of resistance right there. Meta, I mean, worked its way higher. I think really, as we discussed on Meta, it's got to get 150. It's got to recapture 150. If you go out to the daily and weekly charts, you'll see that is a mega line to recapture. And while it's below 150, very vulnerable to going lower. And you can see where the COVID low is pretty close by. Apple had a really nice day yesterday. We opened low, recaptured that 150.5, and it never looked back, right up to 154, maybe a little bit above. But you can see, gets harder now, right? All this support becomes all this resistance. So for Apple to really make progress now, it's got to take out this 154 resistance to make a push up towards 158. And I'll tell you what, if it does that, that would be a really nice buy. Why? Because that would make this be what? Your bear trap, right? Big line of support, breaks, comes back for a back test, and recaptures it. That means everybody that got short in here would be wrong. That's your bear trap. And then you can be long against 154 because you got all this support, right? So really big pivot point right here at 154 in my mind. We may not know until tomorrow after the Fed. It may just kind of oscillate in here. Nobody really willing to go out on a limb right before the Fed to push this higher, or nobody willing to go after it hard in front of the Fed and potentially get your face ripped off tomorrow afternoon if you had gotten short and then they rip it the other way. So might be a hesitation day for today and into tomorrow, but I think this is a really, really important spot. And I mean, yesterday up 2.5% after being down on the open. That was an impressive move. Tesla remains impressive too. If you were focused on this, had a number of places to buy, right? Out of the gate, we opened at 298. Where were your buy points? Well, you had to recapture at 300. That was objective. If you bought there, it never looked back and closed at 309. So I mean, $9 ain't all bad when nothing else is happening really in the market. That was a really nice buy. If you did that, congratulations. And also even at 304. I mean, this has been a level that it's been wrestling with the whole time. And unlike the other days where breakouts of 304 were capped at 307, 308, yesterday we got to push above. So now I think you can ratchet up your your pivots into this 307 area and see if you can't reach 312. And if if you're of the mindset, I don't want to mess around with it here, in no man's land, as it were, what you can do is set yourself an alarm at 3:12. Set yourself an alarm like at 3:07 and 3:04. If you get pullback, if you get a pullback into 3:07 that holds, or a bigger pullback into 3:04 that holds, I think those are objective buys looking for higher, because we've got, what do we got? We got a series of higher highs and higher lows. We got a high and a low, then a higher high, then a higher low, then a higher high. So that's an uptrend. Until that changes, I think you got to lean long on Tesla. Microsoft, more or less dead in the weeds. Just, toggled all day between 242 and, 243 or whatever. As long as price is above 242, the bulls avert disaster, but you're in a well-defined downtrend line. I think, Microsoft is not looking particularly hot. Amazon did a little better. We had a low open, came back up here to enter this gap, basically oscillated all day in a very narrow range, and then pushed higher. So we're up here, 124.66. We've got an open gap up to 126, and then we've got support at 123, bottom of the box, and then support at 121 as well. You don't want to see 121 break, or else you're coming to 117. So also a lot like like a number of stocks that we've already talked about. You've got the big high volume over price value area here between 126 and 129.50. You get a push into the bottom of that range. That is going to be really stiff resistance. Now, it's consequential if it can break through, because then your target's the far side of the box at 129.50. But resistance is resistance until and unless broken. So you'd have a situation very similar to Apple, where you've got a lot of resistance overhead, and chances are that it will make that technical move to fill the gap and then roll back over. So we'll have to watch that. Google was a non-event yesterday, just kind of consolidating here between 101.50 and 103. You get a break above 103, you could see 105. So that might be something if there's a little power today. But in general, pretty darn weak. And like we said, it's really to survive, it's got to get back up above 105. Otherwise, the target is down at that 91. We've been showing that here. Google's got to recapture 105, or it's going lower. Right now, the door is open for a breakdown to 91.50 on a measured move basis. Notice that we're below the box. We're below all the moving averages, and all the moving averages are pointed down. So that's kind of like the triple whammy. Now, if it can break back above 105, that would be significant, because then that would be your bear trap. And then you break above 105, where's your target? Far side of the box, way up at 118. So 105 could not be more important for Google. Netflix. We were talking about yesterday the pre-market strength, it was up $4. Well, they sold that out of the gate, right? Opened up here at 245. They sold that bar and they sold the next bar, brought it down here into that 236 area. Where were the buy points? Well, the buy points were on the way back up. 238, 240, closing at 243.60. So that ain't all bad. You buy at 238 and end at 243. There's your $5. So, these rules, it's all about execution, but the rules hold up. Buying levels as they're recaptured from below, or selling levels if they're lost from above. I mean, that's the essence of tactical intraday trading, and really any kind of trading, even on a daily or weekly time frame. It's just the speed of the trade is different, right? When you lose a level from above on a weekly chart and you get short, you're in that most likely, for weeks until something is either gets stopped out or it moves appreciably lower. So those type of rules hold on any time frame. It's just, the duration of the trade is different. Semis, open low. There really were no buy points in here to speak of. What could be significant here at that 204, 205 level is, notice there were prior lows here, here, here. That finally broke down. So support, 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 resistance, resistance. And now we're peaking, or it's peaking its head above that 205 level. If it can hold above, then you've got a runway towards 208 and 211 up here with the gap. So it, as I've drawn it here, it has recaptured these prior lows, and that, that could prove significant. If it rolls over here this morning, then probably back to 200. Nothing much happening in ARK, really. Flirting right here with the midpoint on ARK-F. Really all of them. This was interesting on ARK-G. Came down for a perfect tag of the bottom of the box and then bounced up. So there again, bottom of the box, top of the box, that completed a round trip back to the bottom of the box. Now that 34.25 is your lower pivot. You break that on the daily, maybe tomorrow after the Fed or at some point in the future. That opens up the door down to 31. But as it stands now, you're ping pong trading inside the box. Same thing with flagship. Top, bottom, perfect tag inside the box. You've got a pivot at 43 and you've got support at 41. And then you got the top at 46. So range bound trading. And then ARK-W just more or less wandering right near the midpoint of its trading range. I think it is important to note, though, that you can see price is below all its moving averages. You got 200 way up here, but then you got the 50, the 20, and the 8, and it's below the midpoint. So you can decide, how aggressive you want to be, but it's I mean, as it stands now, below the midpoint of the trading range and below all the moving averages. It is a bearish setup, and I would anticipate that it either makes this 49 level at these prior lows or comes down here to 46. Maybe that happens after the Fed, but middle of the range, it's hard to make any wild conclusions when you're inside a trading range like that. So let's wrap it up there. Just as a recap, I'd go through and take a look at your high yield bond fund, HYG. Set some alarms there just as a risk on, risk off trigger. We got the Fed tomorrow. I wouldn't expect any bold moves today. I mean, be ready for anything, of course. There's always room for surprises in the market, but I wouldn't be surprised at all if we kind of chop around until 2 p.m. tomorrow when Jay Powell comes out with his announcement, and then presser at 2:30. So let's wrap it up there. Hope you got something out of the video. As always, if you're new here, please hit the subscribe button and the alarm bell. You get all my YouTube content. And then over in the show notes, you'll find a place where you can join our crew by dropping in your email. It takes all of 30 seconds. And then you'll get any intraday updates that I may have. And also you'll get an invite to our trading room. And we always love to have new people with new eyeballs and new ideas to share with the rest of the group. And we'd love to have you there. So let's wrap it up there. Hope you guys have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.